Should you move in 2022 or just stay put and see what's gonna happen? Hi, my name is Adam. I am the owner of Vision Real Estate. Thanks so much for visiting my channel once again. If you're coming back, I really appreciate the support. And if you're new to the channel, please go ahead and hit that subscribe button and the bell if you'd like to be notified every single time that I put out a new video. I try to create amazing content for you guys and really appreciate the support. Now I'm just gonna jump right into this because I get this question a lot. Should I move or should I stay put? Because right now we're kind of in a tumultuous market. Life doesn't care what the market's doing. Most people typically hate moving, and I don't blame them for that. I hate moving personally. The way that I like to describe it is people like moving just about as much as they like going to the dentist. You don't like going, but when you know you have to go, you just go. Having said that, it depends on who you are and what your circumstance is. But if we were to just look at the numbers overall and take a couple of different positions as to a theoretical perspective of an upsizer, a downsizer, that kind of thing, then it is pretty clear on what's more beneficial and what's not. So let's start with a quick overview of what's actually happening, and that'll give us a clear indication of what to do. So right now we are in a downward trending market. I think that anybody who is up to date on what's going on knows that, and we are seeing more listings coming on than are selling. So over time, we're just seeing a buildup of inventory and prices are coming down. We're also seeing probably one of the biggest liquidity withdrawals or contractions from the marketplace in many years as interest rates are continuing to rise. And looking into the not so distant future, that's going to happen a lot more aggressively. July 13th is the next Bank of Canada announcement. I think in my last video I might have said July 6th, but that's not correct. It's July 13th. And we are most likely going to be following the US Fed, which just did a 3/4 point increase, which is really aggressive. And if we do a 0.75 basis point increase, it'll take us up to interest rate levels that are pre-COVID. Now that may not seem like a big deal, but it is. We have significantly more money in our economy now than we did prior to COVID, which is why we're facing such stark inflation. Housing prices have gone up dramatically, along with everything else. Gas, food, basically everything has gone up to a ridiculous degree. And asset prices that investors and basically everybody use to store their wealth is dropping pretty quickly. So to sum it up, we are in a very tumultuous time and we're likely going to see prices continue to drop for the next little while. Okay, so moving on, we know we're in a downward trending market. So what do we do about it? What should you do if you're in one situation or another? Well, there's only a few different types of people who are actually moving, and we can classify them very simply. There are first-time home buyers, there are upsizers, there are downsizers, and then there are people that are just simply exiting the market altogether. So let's go in that order. If you are a first-time buyer right now, on the one hand, yes, prices may be dropping, and that's definitely a good thing for you, but your affordability is also not in a great place because as interest rates move up, you can afford less from the bank. So what does that mean for you, and what should you do hypothetically as a first-time buyer? Well, to put it in the words of Ray Dalio, cash is trash. Inflation is at 30-year highs, and we really got to keep that in mind when we're holding on to a down payment and looking for a home. You've got to put that money somewhere because it's devaluing every single day. The problem is you don't really have many places to turn to. You can turn to stocks or bonds, but they're all dropping dramatically. You can also turn to real estate, which is also dropping. So what do? In my opinion, what I think first-time buyers should be doing right now is locking in a rate. Now, why do I say you should be locking in a rate? If we know that prices are moving down, and we know that that's going to be happening for the next little while, if I could take the clock and rewind it 3 months from now and get you a rate hold at whatever rates were 3 months ago, and then be able to purchase based on that rate with today's prices, you would say that that is a fantastic deal. And it is. So what you should be considering is doing that, but in the future. So lock in a rate at today's rates. In the future, rates will be much higher, which is going to push prices down lower. You'll have a locked in rate from the past and be able to buy a little bit more comfortably. Basically, it boils down to this. In my opinion, you should be grabbing a rate hold and shopping it around to lots of different lenders, preferably using an independent mortgage broker, because I feel that they can do a better job in this type of market, especially where banks are really looking to be competitive because they're lending out a lot less. And then just keep an eye out. Don't buy anything that doesn't float your boat. Make sure it checks all the boxes. And when you go into that negotiation, be extremely aggressive. First-time buyers, you are finally in the driver's seat for the first time in a very long time. So there is an opportunity here. Take advantage of it if you can. Moving on to upsizers. If you're an upsizer in this market, a downward trending market is the ideal place for you. And here's why. If we were to take the market overall and just drop prices by 10%, if you're moving from a smaller home into a bigger home, a 10% drop on your home, dollar value wise, is going to work out to be a smaller amount of money than a 10% drop on a bigger house that you are looking to purchase. Now, my opinion on this is to play it safe, and that means selling first before you go and purchase something. Now, I know that that sounds really, really stressful because there's always the concern of, what if I get stuck and I don't find a place that I like and then I'm homeless? Well, it's still better than the alternative of, what if you're stuck with two houses because you bought something that you liked and now you can't sell your house and prices are moving down and the gap is widening between what you've purchased and what you've sold in terms of price point. That can be really, really scary. I don't personally think it's worth the risk, and I wouldn't do it myself. So I would definitely say sell first and then purchase something if you're going to do that in this market. Just my opinion. And then, of course, don't forget to lock in a rate as well. This also applies to you if you're an upsizer, for the same reasons that it was good for the first-time buyer. If you're a downsizer, this is actually not the best market for you to be moving in. Typically, if you're a downsizer, you should be moving in an upward trending market in terms of price. For the exact opposite reason, that is good for an upsizer to be moving in a downward trending market. So if we're trending upwards in the market and you are a downsizer, and we just take a broad stroke of 10% upwards on prices, whatever you're selling will be worth more dollar value wise than whatever you're buying when you increase prices at a consistent percentage rate. Now, I'm not saying that all assets move and price similarly or at the same broad stroke of things. They don't. But it can be close enough that when you're buying and selling in the same market, that it is worth taking that chance. Every situation is going to be unique, and every market swing and every market shift is going to be unique. So you've got to really play to what's happening currently for you. And then, of course, the same thing holds true for a downsizer. This is not really the ideal time for you to be moving, but if you really do have to, it's better to sell first as prices are moving down and then buy a little bit lower over time. Again, the same fear kind of creeps up, but I do still think dollar-wise, it's worth not taking that chance. And if this were the opposite, where we were in an upward trending marketplace, I would definitely suggest to buy first before selling. You're always going to run the risk of getting caught in between market shifts. But overall, if we're just taking an overall situation hypothetically, it numbers-wise will work out that way to be a positive venture for you. Now, if you are looking to exit the market entirely, this is actually not a great time for you. You should definitely not be selling in such an aggressively downward trending market as we are right now. The peak of this market was in February of 2022, and that was basically the best time to do it. So if you are just looking to cash out, now is not a great time to do that. that ship has kind of sailed. Sorry. Another thing I want to point out is that if you're cashing out, you still got to live somewhere. And right now, rent prices have gone through the roof. I'm going to make a whole nother video on why rent prices are increasing so incredibly quickly. But suffice it to say, if you're cashing out and looking to rent, this is going to be a very tough market for you to do that in. So you should probably just sit tight for now. Before I sign off, I just want to again put this out there. If you haven't taken me up on my offer yet, a few of you have, feel free to click the link below that will connect you right to my calendar where you can book a 15-minute chat with me if you have any questions that are real estate related, or you can also just shoot me an email directly to adam@visionrealestate.ca about any property, and I will send you a personalized video within 24 hours with my answer to your question. Thanks again for watching. Don't forget to like and subscribe, and I'll see you guys next time.